with Louis James, editor of the International Speculator. I am so excited to have you. I rank Analyst, who have the most influence in North America every year, and you're always number one or number two.
Now you can embarrass me.
And what I'd love to do is start out by asking you what you think about gold this week and what's happening in the gold market.
We like to say that volatility can be your best friend. I am the editor of the International Speculator. Our focus is speculation. We are speculators. How can speculators make money if things are even, Steven? Right? You need volatility. You want to buy low and sell high. You need things to fluctuate. That's how you buy low in order to sell high. So actually, we like volatility. There are some stocks on our shopping list, and they've gone on sale today. And I think that's a great buying opportunity. I like that.
Our silver bugs are dying to know what you think is silver. Right now in the market, what trend do you see happening?
Our overall economic view is that there will be more economic correction coming soon, perhaps this year. Doug Casey says that we're going into the Greater Depression. What happened in 2008 was just an overture. So if we see that come back and continue, obviously silver gets hit harder than gold because it's also an industrial metal, not just a precious metal. But that's actually a good thing. That's an opportunity because it is also a monetary metal. Silver is the word for money in many languages around the world. So don't mistake that. We're very bullish on silver. We just see a potential for an excellent buying opportunity coming.
What kind of advice are you giving your newsletter audience with regards to the impending economic turmoil?
We're telling people to go to cash as much as possible. And cash sounds like a silly thing as a speculator. I mean, that's not a speculation. But it is a speculation on where the economy is going to go. And when we first came out with our now somewhat infamous one-third, one-third, one-third formula, one-third cash, one-third gold, one-third investments or speculations, people thought that was insane. One-third cash, one-third gold. I'm out of the market. By the end of 2008, the people who actually did it were very happy. And the people who were basically two-thirds cash and gold, and of course gold did take a hit when the initial crisis hit in 2008, but by the end of the year it was back up again. So two-thirds cash and gold, you were quite insulated from 2008. And the kinds of speculations that we recommended were ones that we thought would do well in a crisis. So it's more or less more of the same now. The caveat for this year is it's an election year in the U.S., and it's a pretty safe trend to bet on that the politicians will do everything they possibly can to avoid economic trouble. If they have to open up the floodgates at the Fed, whatever they're going to do, we believe they will do to try. So we're encouraging people not to stay out of the market. We are encouraging people to go long, but don't go all in, because if you get another 2008, you're all in, you're wiped out. But go long, and when you win, when you have something that works out, take those profits. Don't wait for the 10-bagger, even if something has 10-bagger potential. If you get a double, recover your initial investment, and then you're risk-free. And how can that be bad going forward into the volatility that we're projecting?
Rare earth elements. We've seen you speak at a number of events recently. What's happening with that particular market sector?
Now, I will say, I actually believe the rare earth story. We need these things. And there's even a story, or a side story, to be said for the political independence of these things. Having 90+% of the rare earths come from China is obviously not good from everybody else's, but China's perspective. And so there's a credible scenario where mining could even be subsidized by North American governments in this area just to encourage that independence. I'm not in favor of subsidies, but if they're going to happen, as an investor, I need to be aware of that possibility. So it's a very good story here. These metals are needed. They're not rare. They're just called that. They're not really that rare. Economically extractable concentrations of them are relatively rare. And finding a good one of those is a real challenge. This is not easy. This is not off-the-shelf technology. Each one of these mines is unique. Even the same suite of minerals in a different deposit will not recover the same way. The size of the crystals makes a difference in how much you have to grind them, all kinds of technical considerations. On the most fundamental level, I like the business if you have the right people with the right project, with the right backing, where they can actually find, develop, and build a mine that makes sense. That's a good thing. But this is a many years process. And so it takes people who have the courage really to stay with it through ups and downs, and through markets who don't care and all these sorts of things. And so even if the demand is going to be there, even if the need is real for these things to be mined and to be mined outside of China, I believe in that story. But if the economy goes into reverse, you're going to see the prices affected no matter what. And the speculation that magnifies that, the price of any underlying commodity is usually seen much more in the stocks related to that commodity.
What do you think about graphite, short term and long term?
Short term, somebody's going to make money on graphite. A flavor of the day is a very powerful trend. The problem with it is that it is a short-term trend. You don't know how short. I would be very careful about companies that were rare earth companies last month and were uranium companies 2 years ago. That's not the expertise that's going to deliver the goods. If I was going to go into a graphite play now, I would want to believe that these are the people who've done it before, who know the business, who can deliver, and have the connections, the backing, that even if the market goes away on them, they will be able to finance, they will be able to go forward, they will be able to deliver.
Well, thank you very much. I appreciate you joining us this week.
Sure thing. Thanks for inviting me.